week. We're going to talk about trend lines today and moving averages and why we do what we do with these indicators. We'll look at how to draw trend lines on our charts to ensure that we're engaging at the right price levels when we're looking for a trade setup. I'll talk you guys through the best moving averages to use. There are only 2 of them, and then we'll look through how to use these indicators together. So we'll do all that in the live charts on the platform. And so let's kick things off. We'll jump straight into the platform at this point, show you how to get the platform set up properly for trading, and then walk you guys through some of the items I just talked about trend lines. So let's just give me a minute here to get my screen set up, and we'll get everything going. We'll drag this over here, blow that up so you can see it all. All right, so we're here on the Forex platform. Let me just talk to you about a couple of things before we jump in and start looking at trend lines. I want to talk about desktop setup, really regardless of any platform, trading platform that you use. The setup is always critical, and with the trade strategies that we teach and that we utilize, really requires about 6 to 8 time frames that you want to be able to see at a single glance. So in order to do that, I trade with 2 24-inch screens. And then what I do is I have, just like you see here, a watch list. And then usually I'll have 3 time frames on screen 1, which means I'll have the monthly, I'll have the weekly, and then I'll have the daily, and just kind of space them out so you get kind of a third slice of each screen, and you have a decent amount of price action to look at. That'll be screen 1. On screen 2 will just be everything below the daily chart, the 8-hour, the 4-hour, the 2-hour, and the 1 hour. Space everything out so you have 4 time frames that you can see vertically across your screen. And right there you have probably anywhere from 6 to 8 time frames. And when you're looking at trends and trend lines and all those kinds of things, it really makes it a lot easier to identify trends, especially when charts are sometimes going in different directions. Really gives you the ability to find at least 2 side-by-side time frames, if not 3 or more, which should give you a lot more confidence in the trade setup on the charts, the price action, and in everything that you're seeing on your chart. So that's that, and that setup would basically be for like swing trading or long-term investing. Really just depends. The setups work across all time frames. So if you're on, a daily, weekly chart setup, you could be in, the trade for a number of weeks to maybe even, a couple of months if that setup is on a weekly chart. And then if you're on a monthly chart, then the setup gets even longer. So for more setups, you can go down to a smaller time frame. Intraday setups would be similar to what I just described. You'd have your watch list right here, and then you'd have the 60-minute, the 30-minute, and the 15-minute on screen 1. And then screen 2 is everything below the 15, which would be the 5, the 2, and the 1-minute chart. And so there you got 6 screens to look at, and then somewhere in the mix, probably want to put in a daily chart. A lot of intraday folks miss that. You always want to know what the key levels are on the higher time frame, like a daily or even a weekly, and then get those transposed onto like your 60-minute chart, so you know exactly where those levels are, because they may be lurking around and you may be trading right into a level of resistance or right into a level of support, and you don't even know it because you forgot to check the higher time frame. So that's one of the critical things, but those are the 2 setups for intraday trading, more higher frequency, and then less frequency and more longer term trading for swing trades and kind of buy and hold type scenarios. You can use the strategies that we teach for either one for short term or long term. I prefer personally longer term trading, but some folks like to don't like to sleep on that at night. So they prefer to do it in a higher frequency type scenario day to day. But that's kind of the setup. And then for the charts, for those of you that don't know our charts, we work with 6 indicators on our charts. We have the 4 moving averages, which we're going to talk about today. And they're right here. We have the 10 period, the 20, the 50, and the 200 period. One of the things that we need to do is we need to color code these, because if you add them all, it adds them, I believe, as like a 9 period, and they all get stacked up on one another. But as you enter and change from a 9 to the different periods that we have here, then they all get spaced out, And what you want to know when they're spaced out is if they are in numerical order. Like here we have a little bit of a trend, higher highs, higher lows. This is the 50 in red, the 20 is in blue, the 10 is in black. Here is the 200 in green. If you don't have them color coded, then they're all going to be black and you're not going to know if they're all in numerical alignment. Okay, so that's really critical. Same thing here when we have a nice downtrend happening. The 50, the 20, and the 10 are all in alignment. Any rallies back up into the 10-20 period zone get met with selling pressure to make the next move lower. And that's kind of how things work. So those are some of the basics. And then as far as the RSI and the MACD, we use these two indicators a little differently than the way you might understand them and the way other people might teach them. If you are fading the extremes of the overbought zone or fading the extremes of the oversold zone on the RSI, then that is going to give you false indications when the market is in a trend. It's going to have you actually trading counter trend if you do that. And the way you can identify that is just draw a line here at 50. And when the market is trending, you'll typically see from this line a trade or move from the 50 all the way up to the 70, maybe beyond, back down to the 50, back up to the 70. So it'll keep peaking up at that upper level. And if you keep shorting it, you're just shorting the highs and trying to catch some type of downward move. And usually, like in this particular scenario, this just doesn't work very well. There's just not enough room to maneuver there to understand, how can you potentially go long right here and then, right here, try to get out for a profit. There's just no money to be made there. But if you're waiting in the zone for something to set up, then you have a long way to run going with the trend, and there's a lot more money to be made, and you can potentially make a lot more mistakes and still come out all right and not risk losing money. So those are some of the key things around that. If you're trading the MACD line crosses, works the same way as here. It only works and gets you trading counter trend in an uptrend, or in this case, a downtrend. You don't want to be doing that. Everything here is basically open to the downside, and that's where we want to be trading. It's aligned perfectly with the price action, and that's primarily what we want to be doing. Okay, so just a couple things, and to add those, click on the FX thing right here. You just key in, since we're talking about the moving averages, let's key in moving averages. You can see how many different moving averages there are. The only ones that we're interested in are really two of them, the moving average exponential and the moving average simple. Usually it doesn't say simple, but that's usually the differentiator. If there's nothing after it and just says plain moving average, that's the simple one. The exponential always says exponential, and then all of the other ones have something else after them. So these are really the only two that we use, that we have on our charts. So it's very easy to do that. And there's really nothing else that you need to do according to that, other than that when you get them on your charts, just change and edit, the colors, and then edit the periods from, whatever the default is to what we need them to be in terms of 10, 20, 50, and 200. Okay, so that's everything about the setup. If you have any questions about anything I'm describing here, just go ahead and feel free to get that keyed into the question box on your side. I'll check that from time to time if I can answer a question while it's still fresh in your mind. I'm certainly more than happy to do that. All right, so let's take a look at some of the charts now that you understand what's going on here. I won't go into the convergence and the divergence of the RSI and the MACD. I may go into it a little bit later, but we'll save that for the end. I want to talk about our topic for today, which is trends and key levels and moving averages, and really what the differences are between drawing a trend line on a chart, a diagonal trend line, versus utilizing the moving averages dynamic trend line. I'll show you what that difference looks like. Let's go to maybe an 8-hour chart here. I think that one probably should be trending pretty nicely. And it is no surprise because the daily chart was trending, so it's very natural. On the daily chart, you'll notice that these rallies back up into the sell zone, we're just approaching, kind of barely the 10 period moving average. And we really like to see those smack in the middle between the 10 and the 20 period. And when we find that, that's usually defines the trigger chart for us. The daily chart was really just, as you can see, they're not really moving up into that 10-20 period zone. They're coming up short in that 10 period zone. That just tells me that I'm too high on the zone, but I still have lower highs and lower lows. 50, the 20, and the 10 are still rolled over. We're overextended from the moving averages. The next thing I'll expect is a rally back into the zone. You can see a little level, previous resistance level right there, or support level that should turn into resistance. And if there's a rally back up into that zone, potential is, or probabilities say it should be sold off probably to at least a retest of this low, if not a lower low. And so that's how that looks. Go back to the 8-hour chart. Got a really nice trend here. This is the trigger chart because all of the rallies back up into the sell zone are right in the middle. Nice small bearish candles. And when we get the break of the low, we get a nice move out and away from the moving averages overextension. And then the next thing is a snapback into the zone and then another move away from the zone. And then here we just got a snapback in the zone and we came down and it looks like maybe we're bouncing. Don't have a whole lot of, or any real, we have some divergence around here, but we've actually created another lower low here. So it looks like we still have some room to move lower. I don't see any problem with the MACD either. Everything is converging lower with price. And all I'm doing is just saying, hey, as we get lower lows in price, are we getting lower lows on the indicator? Is the indicator still trending lower, or is it starting to put in higher lows? If it's putting in higher lows while we get lower lows on the price, then that means the trend is weakening and we're starting to get divergence, which means we probably need to move to the sidelines if we get that across two side-by-side time frames. If it's only on one time frame, not necessarily a big deal, but usually it just means that, hey, if we're getting a lot of divergence, then chances are we're going to have, probably a bigger reaction here on the 8-hour chart, and it might just be, a move back up into the sell zone or, something on a higher time frame. That's not the case here on the weekly chart. This is actually an uptrend. On the daily chart is where we'd be looking the next higher time frame. It might just be saying, hey, we're going to have a rally back up into the sell zone where I talked about before, and then the selling might continue. So here we've got everything, moving to the downside. Everything is converging very nicely, so not a whole lot that we have to worry about on the daily chart, confirming the 8-hour chart. What a lot of folks do, getting to the topic for today, a lot of folks will draw a line on their charts that is basically, it's just a how should I describe it? I'll do it right here on this one. Well, if I can, let's see. Let's go with the trend line, and then we'll draw that right. Let's see. Trend line. Should be doing this properly, right? Oh, sorry. I'm doing it on the wrong one. Oh my goodness, Toby. Okay, so here we go. So we're just going to draw. A lot of folks draw the line simply like that. And what they're looking to do is create, I'll kind of reposition this a little bit better. They draw the line, the horizontal line, right across the tops of some of these things. And I'll even extend this up here to give you a little better idea. They'll draw it something like that, where, let's see if I can draw this right down, and they usually draw it right along the tops right there. So you see how I'm connecting all of the tops? That's typically how folks are going to draw a trend line. And if I do one more, the next thing people would do, they would do this, and they would draw another one right down here through the bottom side, and we'll get that aligned a little bit better. Usually these two are going to want to be a little bit more parallel. They're not exactly parallel on this one, but that's typically the way folks would want to define a channel with sloping trend lines. We don't advise to utilize sloping trend lines. There's a lot of reasons against it. Number one, it just doesn't give us, it gives us a channel, which is certainly true, about the price action, but it doesn't give us the ability to understand what's happening in the underlying price action. So when price hits the bottom line here, that's when people are going long. And then when it hits the top line, that's when people are selling or they're going short. But it doesn't really help you to understand where the price momentum is in terms of, a downtrend. If you're, buying here and selling here, you're really trading counter trend. If you're selling here and covering here, at least that's a little bit better, but it still doesn't tell you at the high where or how much risk you're taking on the trade. Whereas what we're doing when we get a price like a candle, a bearish candle in the sell zone between the 10 and the 20 period moving average, then I'm going to use the high of that candle and the low of that candle to gauge my risk, right? I'm going to have my stop loss here. I'm going to have my entry here. And once price breaks through, it'll take me into that trade. And that means I can have my break even right here, where I can dump half my position, get the trade to break even, leave my stop exactly where it is, and then see how far I can catch a run. Don't have to be worried about getting stopped out because I've already taken half my profit. I've taken all the risk off the table. Trading based on these trend lines, sloping trend lines, doesn't really give you the ability to do that. And it also doesn't provide you any type of support or resistance that is reliable. Where here, what I'm looking at is I'm looking at the price action where we have some touches right here that create a nice flat level on this downward move. And that's basically that flat level getting broken through. And then on the retest, it comes up and it retests that level. And price, lo and behold, is right in the sell zone. And it's up against a resistance level, and we're getting a sell candle in the zone. So I've already got a number of things just based purely on the price action that I can judge where I don't need to utilize any type of a crutch like a sloping trend line. So let me just delete these real quick and show you what that looks like without it. So now all of a sudden we can draw a horizontal line instead of a trend line, right? And a horizontal line is much more valuable to us, totally in favor of this. Now that defines the flat level right there, where the swing high is right here. We have lower highs right here trending down into the flat level. And then on the third touch, we get the breakdown through the flat level. And you'll notice that from the swing high to the flat level to right down here is pretty much a mirror image of the consolidation that we had here. And that gives us a pretty good idea for a price action target once we break the flat level, looking 1-to-1, would put us somewhere down around here. Maybe not exactly, but pretty close. But even, and usually what happens is folks dump the trade at this point, and then normally with all that covering, you'll get a rally back up into that zone, back up against that key level of what was prior support, now becomes resistance, and we're back in the sell zone, lo and behold, and we have rejection candles, and we get our risk again set right there at a stop loss, our entry set right there based on 1, 2, 3 candles right there. And then once we get the breakdown through that level, then our break even is probably right about here, just kind of eyeballing it, where we can get the trade to break even, keep half of the trade, and then look for the next move lower. So that's the benefit of working with horizontal lines rather than sloping trend lines, and also using your moving averages to help you gauge where the price action is and why price responds and reacts this way when it's in these equilibrium zones between the 10 and 20 period moving average. Okay, so another one right here, we have a flat level, not a great one. We have a couple of, it's not really as perfect as this one, where everything is an exact touch on the line. There's a couple of pips difference right there, but overall, it's fairly good. We got the swing high right there, the lower high right there, and on the third touch, it breaks right through. And then on the rally again, hits that level again, and then resists that level. And that's when you get the real follow through to the downside. So when you start doing it this way and looking at these horizontal levels, that starts to create a lot more price action analysis for you. Here's another one right there where we got the touch right there. Here's the high point, and then we got the second touch here, and then it rallied again and then broke through on the third touch. So more than likely, if we went down to like the 4-hour chart, we can see that one a little bit better. And here it is right here, right? We've got the one, even the 2 touches there. There's the swing high, rally, the lower high, and then it comes down on the third touch. It powers through. So that's what those are looking like. And it really, when you look through, multiple different time frames, you can see the same type of setups. You just have a little bit more candles, a few more candles to look at. Okay, and even here with these tests down here, now right here, we haven't put in a lower low yet, but we're already getting a higher low. So even if we did break lower here, I really can't see this coming down and putting in a new lower low. So more than likely, this may be a double bottom type of reversal pattern. I'm not interested in trading that. It's a very low probability type of trade, but I am interested in identifying, some of the divergence that's about ready to occur here. It hasn't occurred yet. It's only when we get a lower low that we have higher lows on the indicators, and that's not necessarily a good thing. It means the trend is weakening, and more than likely there's going to be probably a rally back into the sell zone on the 8-hour chart, which we were just looking at. Let's pull that up. And so we're already back up in the sell zone right there. So it may mean, a rally back up into the sell zone on the daily chart, which is one that looks much more probable. And that rally would probably be right up into that 10-period zone like it did before. And then you'd start to see potential setups then on other time frames as you get a rejection candle in and around that sell zone on the daily chart. And that might set up the next trade for going lower. We'd only have to compare that then to the weekly chart to see if we have everything set up. The weekly chart is doing something a little bit different. It's going higher. So all of a sudden the daily chart going lower may not look all that great. And the fact that we may want to take a look at some of the fundamentals related to the Aussie dollar and the US dollar. The US dollar has been rising due to the rising interest rates based on like the 10-year notes is kind of typically what people follow. So that's been rising from probably like a low of 3.7, which it was, I think, a couple months ago, to now it's like, I think it hit 4.3 today. So it's risen almost, like half a point, maybe a little bit more. So that means what people are doing is they're selling the Aussie and they're buying the US dollar because the dollar is going up. And what that means is that if they're selling, it's producing this downtrend right here. So it really just, depends on, potentially what might happen, in the markets related to interest rates. I think we are going to get another interest rate cut. Maybe it'll come at the year end. Maybe it'll come in Q1 of next year, 2025. But overall, we had pretty low inflationary reports today, which signals that the Feds may continue to act and reduce interest rates, which will then send the US dollar lower. So even though we might have this pullback with a higher dollar, more than likely, eventually going into next year, we're going to get a lower dollar, and then folks are going to start buying the Aussie and then selling the dollar, which is then going to potentially push this price action potentially higher. So some of that stuff you need to be aware of as well. But if we just look at it technically on the chart, we got the 50, the 20, and the 10 all in alignment. A pullback has obviously been, we want to see the pullback into this zone. We're getting an over compensation and a move way below that, almost down to the 50 period, which is not good. That just means that we're probably too low on the time frame. So let's check the monthly chart. And on the monthly chart, it just gives us just a longer view out and kind of a backup view to see that overall we have been in a downward swell, on the Aussie dollar, and we just had kind of some sideways price action right here and pretty much kind of topped out right about there. And you can see all of that resistance right around there from both sides, both from the short as well as the long side. And it looks like potentially we may be coming back down here to then continue this trend lower. So only until we look to the highest time frame do we actually get agreement on potentially another move lower in the price action, which is also potentially a little bit different from what the fundamentals are telling us with with going forward, lower interest rates and a lower dollar. Folks might be buying the dollar, and that might either send us into an uptrend or it might send us on more of a sideways type of market. But overall, that's kind of the different ways to look at all of the different trend lines that you're using. The moving averages always work out better because right here we have a crossing of the moving averages, which means they're not open to the downside. So we don't have all of them in numerical order, which means we can really only use the price action. We can't necessarily use the moving averages on this monthly chart because everything isn't aligned the way we need to see it. So overall, you can find better trends than this. These aren't great trends, but we did have some good trends for a while on the 4-hour and the 8-hour. Unfortunately, they're just potentially maybe coming to an end based on some of this divergence that we can see here. Okay, but all of this has been done basically just with pure price action analysis, the moving averages, and no sloping trend lines, just horizontal trend lines that help us to identify a couple of things where our breakout trades are, right? So we have breakouts going lower in a couple of different instances. And then we also have points of resistance where price bounces and rallies back up into the sell zone and up against a key level, which gives us a lot of confidence where to place our stop. Above that high, we're protected by price action here, entry directly below the low of that candle, and then the next move is potentially lower. And we can really get a good view onto that as opposed to having a sloping trend line here and not having any of this other confirmation. Does that make sense to you guys? So there's a huge difference in drawing sloping trend lines and utilizing more of a structured dynamic like we're doing here, because we're looking at individual candles. We have the high and the low of the candle. In other words, if this is a really large candle in the sell zone, then I'm going to have to put my stop way up here, my entry way down here, and then my profit target to get to break even has got to be way down here. So the farther the price action is away from your entry, the harder it is to reach. Okay. Any questions from you guys on some of the price action here? Interesting stuff, learning anything? I'll just delete these really quick, kind of keep the charts clean, and then we'll go ahead and do this a couple of more times. We'll check out some other charts and see where some of the price action is on some of these various time frames that we're looking at. I always like to scan the charts top down, monthly, weekly, daily, get an idea of where the long-term price action momentum is. And that way, when you move down to the lower time frames, you want to be trading in the direction of the higher time frames is the general idea. All right, Euro Yen. Taking a look at this one. Really nice trend here on the, sorry about that. Really nice trend here on the uptrend for the Euro Yen. The yen has been extremely weak. It's just been starting to strengthen a little bit, and that's why you see this downward move right here, is because the Central Bank of Japan has been lowering interest rates for almost a decade, and they just recently started raising interest rates. I think they've only done one rate increase, but with the view of going forward that they might continue to raise interest rates is going to drive the yen higher, which means folks want to be selling the euro to, or folks want to be actually, buying the euro and then selling the yen. So, so in this particular case here, in looking at this big drop off, things here with the euro, I haven't been tracking interest rates in Europe, but they've been doing some things that are pretty similar to the US. It's more of kind of a global economy phenomenon, but we're getting a little bounce up. And one thing you can do is look at the retracement, and usually the retracements, if it's going to roll over and put in a new lower low, the retracement here would probably be a Fibonacci retracement of about 50%. And if you put a line right there, I can just eyeball it and see it's probably between the 50 and 62% level right there. If I actually put a Fibonacci retracement on it, I'll just draw it from the swing high to the swing low. Let me extend that over here a little bit so you can see it. And then you can see the bounce from this level has gone right up back in to that 50, 62% level. It looks like it's rejecting, which gives me a pretty good sign. If it closes out that way by tomorrow, more than likely it's going to be the case where it's going to be a sell-off. Doesn't mean it's going to come all the way down, but more than likely it's probably going to be a significant retracement. And then if there is any buying that comes in, it'll probably set up at the 50% to 60% pullback of this move to that move. And that's how I would analyze that. So this would be kind of a zone that I would be waiting for. I wouldn't be doing anything here to buy it higher or really necessarily to short it. I would just be looking for a pullback and see if we get something that's going to move back into the zone and retest the low here. If we start getting a bounce in and around here, you're going to start to see then a higher low, which means you'd have a higher low here, and then more than likely the next move would be a higher high, which means we'd be trending back up to the most recent high. So that being the scenario right there, we can look at a number of other things. The daily chart based on that is certainly trending. All the moving averages are in alignment, but since we have this rally right back into that key zone, if any sellers are going to enter this market, they're going to enter it directly in that tight zone right there. So I really don't want, if I get a pullback, I'm going to have to look at the pullback carefully. If it's a really small candle, I may consider it, but if it, more than likely, I think it's going to probably blow right through there and come in a little bit lower, and that's going to be kind of my assessment. So I really don't like where the price action is on the weekly chart. That's very bearish, and I'm not really inclined to short this necessarily, since we've been on a really massive, uptrend right here. And this is really kind of we're not really necessarily trending just yet. We kind of broke straight down. We went back up, came here, put in a higher low, not even a lower low, went back up and then put in and broke up through. Right here, we actually broke up through the lower high. So we actually do have a higher low. And at this point right here, we have a higher high. So potentially I'd like to see, a little bit of proof and a pullback, see if we get, some connection right here and see if we've got a push to go higher. And that would pretty much be the only thing that I'd be looking at for this particular scenario. So overall, this, some of this price action here looks decent. I imagine we'd have the similar on the 8-hour. Doesn't look all that great, even on the 8-hour. The 4-hour probably doesn't look any better. Moving averages are crossing over. Actually, right in here, the 4-hour looks pretty good. We've got a pullback beyond that, which means a pullback into the buy zone on the 8-hour chart, which we were just looking at. And that's where we are currently with price, but we don't have a bullish candle in the zone. We have this one right here, but you can see how big that one is. I'd have to put my stop way down here, my entry way up there, and then my profit target's got to be way up here. Farther the profit target is away, just the more difficult it is to reach. And so the fact that we're in the zone here is a very bearish signal. So I have a couple of charts that are just saying the opposite things, and that just doesn't make me feel good about the trade. Also, with some of these higher highs, we're getting some slight divergence bumps here. And even with this higher high here and this higher high, it looks like we're getting even a lower high right here on the MACD. So we have a lot of divergence setting up on the 8-hour. The 4-hour, let's see if it corroborates that. Divergence, as you can see, higher highs, lower highs, and we have almost equal highs or slightly lower highs on the MACD. But we're starting to get divergence across two side-by-side time frames, the 4-hour and the 8-hour. And that tells me then more than likely we're probably going to get a bigger rally on the next higher time frame, which would be the daily chart. So we could rally higher here on the daily. We are converging on the daily chart, which is very positive. But based on this right here, I really don't like that setup. And this right here means more to me, especially if it closes out bearish by the end of the day tomorrow. That'll really confirm the fact that I really don't want to be fooling around with a trade going long right into this key critical level right there. Okay. So that's really, kind of what that one looks like. If you were to draw any trend lines here, those sloping trend lines would be going right along there. But again, as you can see, they really don't do a whole lot for us. You're just trusting that anytime price hits a trend line on the top side or the bottom side, and that's the one signal that's going to trigger you to either buy or sell. That's just not enough information that we want to risk money on. And so it's much better to have, a good candle grouping, some price action. Price is always king. It tells us exactly what's going on in our charts, and that really helps us a lot. All right, let's take a look at, let's see, that was the euro yen. I don't think the euro dollar has been doing a whole lot. Yeah, this one has really been sideways. We did get a nice rollover right here, double topping structure and a move down. That's because of the changes in that we've been seeing in interest rates. The rising interest rates in the U.S. sending the dollar higher, so people are selling the euro, buying the dollar, and that's why you're getting this move here. That's going to be a common theme throughout most of these charts or currencies paired with the U.S. dollar. So we're getting a little bounce right here. Everything has been, really isn't even a trend. It's pretty much a straight down move. Usually we like to see these at a 45-degree angle with a lot of small candles like we've been looking at. That gives us a much better trading opportunity. But if we just went a little bit lower, we can probably find that like on the 8-hour chart, maybe the 4-hour. There you go. So that gives us a nice 45-degree angle. You can see how close that is. Even if we went to the 4-hour chart, we'll probably get a better setup with that price action in the middle. And then that's what we get is really nice price action, nice 45-degree angle, very controlled, all small candles, everything setting up right in between the 10-20 period zone, which makes that a very nice setup. But as we get down here with the lower lows, we continue to make lower lows. Here we're about a slightly higher low than that low right there. And then we really never get another lower low. We start getting higher lows, and then we get a lower low, and then we get a higher high. And now we have from here, higher low, higher high, higher low, higher high. All the moving averages get into alignment and they start moving higher. So we actually do have, a shorter term trend on the 4-hour, and that'll probably be reflected in the 2-hour as well. As you can see here, everything aligned, pullbacks into the moving average zone, and we're going higher. So the only thing we need to figure out is, we're currently in a pretty big, downtrend according to the daily, and then even looking at the weekly. The weekly has really been in a sideways motion. So right here, you'll see some levels in and around there. I wouldn't really call that a great level. Probably some better resistance right down around in this area. That seems a little high, but nonetheless, it seems to be bouncing off of that level and potentially moving higher. So I don't see any. Probably the next level would be maybe right in around that green one. I'd probably move that up a little bit. Maybe right there might be the next level of resistance where it might rally up there, and then we can throw in. I wouldn't even want to throw in a Fibonacci because this is really a sideways price action chart. What I'd probably need to do is go to the monthly, see what that looks like. And here we go with the monthly, and we can really start to see where some of those key levels are grouped right there. And so the reason it bounced right there was really right around some of these previous old levels that it kind of overshot and then bounced up. So this is really a lot of sideways price action. I wouldn't bother with anything here, even though we have some nice trends here. These are pretty much over. And I would just look for a better chart with some better trends on the higher time frames to see if there's anything that we can do here. Let's take a look at the dollar CAD, see what's going on there. Get up the daily chart here, the weekly daily. So here, we've got a move higher. So with the higher interest rates, right, you're getting that move higher with the dollar. People are buying the dollar, selling the CAD. That's why we've got the move back up here. Got in a little double topping structure right there. Moving averages are mixed up right here, so they don't look all that great. Can't really use that weekly chart, but here we've got the daily chart, everything aligned, but we're at a retest of that key level. So that isn't something I'm crazy about. We needed to catch this earlier, so we've missed it. But if you go down to the 8-hour, you can see all the opportunities that you had here on this chart. Looks like that might have been the trigger chart. I don't know if the 4-hour would have been very good to trade, but we can see really nice 45-degree angle. Actually pretty nice here on the 4-hour as well. The 2-hour is probably where it ends, and the pullbacks are probably a little bit too deep. And then you start getting the crossover of the moving averages, which that just tells me that I'm too low on the charts and that my trigger chart is really the 4-hour, and my higher time frame confirming chart is the 8-hour, along with the daily chart as well. Okay, the daily chart just doesn't look that well because it's going straight up, but the 8-hour chart and the 4-hour actually look really nice. Looks like we have a flat level looking to climb higher. We do have some divergence here coming across the 4-hour, and we do have divergence on the 8-hour. And that happens both on the MACD and the RSI. So the trend is weakening. You can take these, you can trade these pullbacks with some divergence, being that we've got it on, 2 time frames side by side. The daily chart is actually still converging, so that looks good. It's not too much overly extended from the moving average zone. This may have, one trade left in it, but if it was a small candle in the zone where I could have a tight entry and a tight stop, then I might not even be worried about, taking a loss there. It's a tight stop, but you actually have more of a flat level, which requires me to put my entry here, my stop way down there. That's just, quite frankly, a lot more risk than I want to take. I can find better trade setups. I really wanted to get engaged, somewhere back when this thing was really pulling back and really looking for another move. Here, I just don't see a whole nother move really going forward with all the weakness that I'm seeing in the divergence. Okay. Everything good? You guys have any questions for me? Anything like that? I've been talking a lot. Might need to take a breath here for a minute if you got a question for me. Dollar yen is probably going to give us something very similar to the euro yen, because the euro and the dollar kind of perform almost the same. The world's major currencies there. This is really a sideways market. Got a flat level setting up right here. Price action looks to be right in that 62% retracement range. We do have a breakdown between the higher lows that we previously had. Lower high here, lower low here, and then we broke up through the lower high, and now we've got a lower low and a higher high, which is just kind of indicative of a sideways market. So not a lot going on there that I'm interested in trading. Because we have this little move up here for several weeks, we do have a trend beginning here, and you'll see that on the 8-hour as well as probably the 4-hour. And you can see, there are certainly trading opportunities, available on that 8-hour chart. But overall, that was just a move back up into that zone. And we really didn't. The only thing we had was a key level right here is where we got that bounce. But more than likely, I would have anticipated that maybe rallying back up into a sell zone up against that level and then rolling over, but we never did get any type of a Fibonacci level setting up there, nor did we get any type of a bearish candle setting up right there. Just kept chugging along, and this is really the first bearish candle that we're getting. And we're getting, let's see, I'll do this to there, the most recent high to the most recent low. And then as you can see, that rally is right back in kissing that 61.8 zone. And then there's the 50 right there. And so that's really the zone right there. We're just right at the top. Be interested to see how this reacts tomorrow and what the close is. But right now, the price action peaked at here. It opened there, peaked right there, and then it looks like it's going to close down here or maybe even lower. So a bearish candle in that zone usually means look out below. Doesn't mean it's going to come all the way back down here, but it might be a retracement back down into the 50 or 62% retracement of this move or that low to that high. And then we'll have to see what that looks like there. I would expect, if we get, more good inflation numbers, meaning lower inflation, then, interest rates will start to subside, and that will, start to trend the US dollar lower. And then that would mean, more than likely this would roll over and continue going lower. And if Japan is actually going to continue raising interest rates, that's going to send the yen higher. And then we'd have the opposite scenario of what we had here, which would be the downtrend continuing lower to the downside. So that's really how we use the moving averages, and that's why sloping trend lines, diagonal trend lines are just not very good, because we have so much more to look at with the price action. The price action is just really rich with everything that we need to trade profitably, like risk analysis, risk assessment, understanding what kinds of candles that we're looking for. We'll tend to talk about a lot of that stuff on some other sessions that we do here. We always have a different topic every week, but it always relates back to the trade strategies that I'm showing you here, okay? All right, I got a question here. Let me see. Is there a sign other than the divergence on the RSI that we are not catching a reversal instead of a continuation? Yeah, just because we're getting, the other sign is both the RSI as well as the MACD. If both of them are converging to the downside, then that means the trend is still strong. Continue trading it to the downside. But if we get one that is converging and the other is diverging, then they basically cross each other out. And more than likely, we have a very strong move that's continuing to either, the downside or, whatever the price action looks like. So again, we're not looking to catch a reversal. That's not how we're doing this. We're not looking for a weakening trend and trying to reverse it. That's not what you want to do. It's a very low probability type of trade. We're looking to identify the reversal signals or the weakening trend so we can actually move to the sidelines, because that's when we want to stop trading the trend, move to the sidelines, and then wait for the price action to either clear out the divergence or look at the next higher time frames to see if we're going to get, a price move back into that buy or sell zone on the next higher time frame, so we can continue trading the trend. We don't want to be trading counter trend, and that's what reversal trades are, is their counter trend strategies. And they typically don't work well. You might get a bigger payoff, but you may only get a 30% success rate. The trade strategies we're showing you are, once you get good at them, they're about a 70 to 80% success rate. You just have to get good with the strategy. And that's a much better scenario to trade with, because it just keeps you more positive on what you're doing. Reversal strategies, you're winning, maybe 1 out of 3. It's very difficult to hang in there when you're taking a lot of losses and losses are mounting. Does that make sense to you? So there is a lot of other price action as well. There are double bottoming structures, double topping structures, flat levels that break through with, a rejection candle, like a flat level breakout. That's a fake breakout with a lot of diverge. So there's a lot. I can go on and on and on about other ways to determine, when a bottom is coming. Usually this is a pretty good indicator. And when you start to get this, it's just time to, pack up your profits, move to the sidelines, and start to look for other good, strong trending charts. Does that help you, Jonathan? All right, let's check the time here. I'm out of time, so let me lock this up for today. We're pretty much done with the charts. If you guys want to take a look at those charts again, you can check out the recording. So at this point, you guys may be thinking, hey, Toby, this is all great, but why should I trade Forex? And furthermore, why should I do it with Forex.com? Let me kind of walk you through the Forex commercial just real quick. Forex trading, it's a timeless event, right? Regardless of where you live or the time zone you're in, you can trade Forex around the clock, 5 days a week. When you're trading Forex, it's not like you're trading, equities or stocks where you're buying an ownership stake in a company. Foreign currency trading, it's really just a speculative paper contract type of trade. It's a momentum trade, if you will, where you're speculating on the short-term direction of specific currency pairs. So as you continue to study the Forex trading strategies that we're showing you here week to week, you'll learn that opportunities exist in Forex, both long as well as short, just like you saw today, just as easy to buy an uptrend or to sell a downtrend. And then lastly, you can trade more with less. Foreign currency leverage is up to 50 to 1. That's a lot. That allows you to take larger positions with less capital, but it's important to understand that with that kind of leverage comes additional risk. So you need to manage that risk, be aware of it, and we'll show you how to do that with the trade strategies that we're walking through week to week. You saw a couple of the risk elements today, where to place the stop loss. All of those kind of things need to happen on every single trade. You can't just kind of trade willy-nilly and just expect the price action to always work. Because even if the strategy is successful 70 to 80% of the time, you're still going to have 2 to 3 losing trades out of every 10. And if you don't know where those are, that's why we need to have a stop loss. Okay. All right, here's all the contact information for Forex and their customer support teams. For those of you that still have some questions, I can stay on a little while longer, get those answered for you. For those of you that might be leaving the webinar, there is a short survey as you exit. Take a moment to fill that out. Let us know if you found the content useful. We're always trying to improve and deliver content that's valuable to you. If you guys do have any questions, take a minute to get those keyed in to the question box right now. Got about 4 minutes left to the top of the hour. So more than willing to hang on and answer any questions that you have about the strategies or about trend lines and moving averages and the topic for today. And then one other thing while you guys are doing that, check out the forex.com website and look at some of the upcoming webinars that we have. We do these pretty much every week. There's always a different topic, but we're basically doing the same thing. We're going into live charts, talking through our strategies. We're just going to be talking through a slightly different component of the strategy each and every week. So over, a couple of months, chances are pretty good you'll get the entire, strategy and how it works and everything in between by spending kind of an hour with us every week over the next couple of months, and we'll give you a pretty good flavor for what everything looks like. Like today was a lot about trending in the indicators, the moving averages, convergence, divergence. Next week, I haven't checked the count. I don't know what the topic is, but it might be something around candlesticks, or it might be something, something different. But all the topics pertain to the trade strategies that we're showing you on these charts in the live price action. Okay. All right, that's my pitch for the night. Thank you guys for the compliments. Glad you guys enjoyed the session, learned something. Anything else from me that you guys need? Got a couple of minutes left. If you have a question, I can still answer that for you. Otherwise, if you guys are good to go, we can shut it down a minute or two early, and we'll get that. We'll get the recording out to you via email, basically around this time tomorrow. And again, if you don't see it in your inbox, make sure to check your spam folder. Sometimes it goes there. All right. Thanks again, guys. Appreciate the compliments very much. Question here, why is StoneX accepting a green card holder as a client? Well, Forex is a They do have a global business, so they're not just in the US. They're in several other places around the world, Canada and so forth. So um, depending upon how they do that, I don't have any idea. I don't work for Forex, but I don't have necessarily any idea about how they work with clients based on whether people are in country or out of country. Usually with these accounts, they do, with most brokerage accounts, they do ask you for a social security number or some type of an identifying factor in terms of, your residency. So that might be part of it. But if you have a green card, I mean, more than likely that should be a valid number to open up a brokerage account, I would think. I don't know that for a fact though. So what you might want to do, Greg, is get a call in the 800 number, ask them about that, and see what the deal is, and maybe they can help you out there. Any other questions before we wrap it up? Down to the 1 minute mark. Oh, not accepting. Yeah, it may be a situation where you have to be you know a state national in order to open up a brokerage account. But you may want to call them about that. I would call them about it and ask them and see why. I mean, they would have all the information about that. I really don't have any experience with opening up foreign accounts. I pretty much am a U.S. citizen, and I pretty much trade U.S. stocks, bonds, commodities, all that kind of stuff, forex and what have you, just right here in the U.S. But give them a shout, see what they have to say, and maybe you can do something with a green card. You just maybe need to go through a different process with them. All right, folks, I think if that's the end of the questions, we're right at the top of the hour. I've got to keep these to about 60 minutes, but it's been great chatting with you guys for the hour. Hope you guys got some value from that.